Good afternoon everyone and welcome back to another instalment of the Forex monthly forecast videos. Today I'm going to be analysing the GBPUSD market, and to do this I'm going to run over the fundamentals first to see what events are coming up and how it's likely going to shape the direction of this pair. Then I'm going to move on to the chart where I will identify key levels to watch out for and to aim for in the next 30 days or so. And at the time of recording this video, GBPUSD is hovering around the 1.38 mark. Enjoy. So we've generally seen the UK economic projections recently provide quite a supportive outlook for the sterling. Now this is still the case. Economists are expecting the Bank of England to be on course to release a forecast for GDP 2021 growth that would be Britain's fastest since 1921. Now we will now start to see the easing of lockdown restrictions to add to this narrative, the 19th of July being the date where most restrictions are going to be lifted. However, it's the rapid increase in the Delta variant COVID cases that really has investors thinking twice. And in fact, it has been reported that 50,000 cases a day could be found in the UK once restrictions are taken off on that July the 19th date. To add to this, we have these tensions now between Britain and the EU starting to rise again. In response to Brexit Minister Lord Frost's criticism of the EU negotiation tactics, the European Commission Vice President has threatened legal proceedings against the UK, a warning that he said that trust is a two-way street. Now, what I take from this is if the UK fail to implement trade measures soon, as agreed with the EU, then this is going to cast more doubt over the future trade talks, and as a result, the sterling is likely to struggle. Now let's take a look at the US. Now over in the US, the story is a little clearer, but only a little. The focus really is on the FOMC meeting minutes later today. It's going to set the tone really for where the US dollar prices are going to go throughout July. The minute meetings are scheduled for today at 7 PM GMT, and it's going to be watched so closely. Now the reason for this is because investors will want to learn more about the pace and the timing of any quantitative easing tapering, pace and timing being the real key here. If the Federal Reserve emphasise their hawkish message from last time out, I'm expecting a bounce in US yields because I don't think that the Federal Reserve are going to be happy with how low they are at the moment. Therefore a fall in equities, which I think are overstretched at the moment, and another leg higher in the dollar. So when you think about the fundamentals that I've just run through, we should really be looking for pound dollar sells, and that's exactly really what I'm going to be doing. And I just want to point out how the charts are now starting to fit in this narrative, that we are now starting to get a stronger dollar and a weaker pound, which is not what we had a couple of months ago. You can see where we had this remarkable bullish run and we topped out really around 1.42, and you can see where the market tried to rally and potentially make another leg higher but failed to do so, then made a leg lower. Now we're at this really interesting stage now where in order for me to be fully convinced of this bearish trend, what I want to see from this pair is I want to see... Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenforex.co.uk you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Forex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Basically a break below these two market structure lows, these two swing lows, where we had these equal lows formed and we had this bullish impulse. If we can get a close below there, which happens to coincide exactly where the 200-day moving average is, then it's go time for sells for me. I will try and look for some intraday stuff as well, but this would really confirm and really opens up this market to, in the long term, fall potentially to different swing lows along the way, 1.3, but just for July, hopefully we can get a close below this 200-day moving average. So I would put a take profit level really on any selling opportunities in July straight away, just in and around this 200-day moving average, which sits at around 1.365. A fall below there and we can start to look to maybe 1.35, but let's calm down for a second and just have a look where we can find these selling opportunities from. Now we can see where we had this big drop in the last hawkish surprise from the Federal Reserve, and really it can be argued, yeah, I agree that there is this really clean 4-hour order block which hasn't been tested yet. Now my problem with it is just how far away it is. 1.41 seems really far, and this seems to be the correction that we had. You can see that it's respecting this 50 moving average really nicely as well. And if you have a look where the market could realistically retrace to, well, I think this was the retracement here, because we did have a 4-hour order block level in here, which was mitigated on the 6th, which was yesterday, on the 6th of July, where we had this run down, this break of structure low down here. You can see that this was the order block really that was left behind. This correction, all it did was mitigate there. So the mitigation has occurred, so the market doesn't really need to go any higher than that. It could potentially run up and test this level, but, and I'll just draw exactly what I mean. If it gets into this level, I think that is our premium level where we can sell from, and then we can look to aim for that take profit there. So for the patient traders out there, potentially you might want to wait for a level like this, which is still yet to be mitigated, targeting around 1.36 where that 200-day moving average was, around a 7-hour trade. Alternatively, we have to be patient, and I'll go down onto the 1-hour chart and you'll see exactly what I mean. You can see we've had this quite significant leg lower from this correction. Now I think the cleanest level really where we could sell from would be this level here, which is this order block entry here. You can see that from that level we had a break of structure here. We also had, it was quite an impulsive move. We had the break of these lows here, and really we just look like we're set to fall down into and test the lows down at 1.37. Ideally, I would like before the FOMC or after the FOMC with a bit of market manipulation potentially to go up and run and just touch this order block level, and then we can aim as an intraday position for the lows down here at around 1.37. I'll certainly be setting a sell limit order here, and around a 5-hour trade, which is a really nice return. And I think that is the cleanest level that we're going to get for GBPUSD at the moment. I do see some more downside in July. I am wary that if the UK is really successful in the easing of their lockdown and there isn't this big backlash, and hopefully we don't have to go into any tighter restrictions in the winter, then I do believe that we're going to see another leg lower in this pair unless it is really successful, and then the sterling starts to continue its bullish nature, but we'll give an update on that as we go. So that's it today, guys, for GBPUSD. I hope everyone has enjoyed this video. Please like and subscribe to the channel. Again, it really helps boost our channel, which is getting some nice traction at the moment. We're getting some really nice comments, which we reply to as well. I'll catch you all for the next video, which will be tomorrow. Cheers, guys.